Good afternoon, Maverick traders. It's market roundup time. It's July 14th. Joe with you here on a Thursday. And it's been a pretty interesting couple of days based on a couple of inflationary numbers. Folks, I'm going to give you my 2 cents on the markets. I got some trades to look at. You know the drill. Take responsibility for whatever you follow along with this and all of our courses. So let's get into the market analysis. What I'd like to see was these markets actually shake off hotter numbers than expected. So I just went right out and said it here, folks, because you've probably seen many times all sorts of the place articles on the CPI was higher than expected. We're at a 41 inflationary high. The PPI comes in today. I mean, also super high. All sorts of big things like that. Now, the support levels held, and that's one thing that's really cool. We talk a lot about this here at Maverick. When bad news just gets priced in or basically ignored, the markets become tired. The fear of inflation, the worry of a slowdown. Yeah, we've had it. We're feeling it. We know it's coming, and it looks like the markets are almost tired of it, which is kind of neat. That's your first sign that we could be setting at least a pretty solid bottom going through the summer. We could be seeing a little bit of ease. We talk about, hey, has inflation peaked? The answer was obviously no, but these markets might be just as simple as sick of it. Now, that being said, we didn't really gain any ground. Take a look at the Dow, the S&P, and the NASDAQ over there. Flat again, just under 0.5% for the Dow, the S&P 0.3. The NASDAQ finished to the green side just by a little bit. Russell's struggled a little bit. Oil coming back, but gold has been dropping pretty aggressively. All precious metals have. In fact, folks, we're seeing a lot of move into the dollar for many reasons. Fear and inflation, right? If we are going to raise interest rates, it's going to increase the power of the dollar globally. We did see something when it came to the euro dollar and some of the worries that Europe has, obviously, as I think they believe they reached parity. At one time, it was actually below 1. We'll get to that in a second. So the advanced decline line hasn't really done anything, and that's what I'm talking about. We really didn't gain any traction. So far, we've had 2 days of reactionary bad news, and these markets have fought back and closed flat. So I'm seeing some pretty good strength and some hold on support. So nothing really changed advanced decline-wise. 72% decliners, 23% advancers. We're at that 75-25 or 74-26 when it comes to above below the 50-day moving average. And it really didn't really create too many good trades. It doesn't mean that the trades that are out there are bad, right? And the ones we've been looking at because they're still holding their pattern. It's just nothing's really triggering. And what I mean by that is if we zoom in a little bit closer into the last couple of days specifically, you'll notice that we have 2 green candles here. They both closed on their highs. But if you take a look at yesterday's close and today's close, we actually have a slight decrease in movement, right? So that's showing that it's not super strong, but because the net we did go lower, but it is showing this support right here is indeed holding, and that is actually a pretty good line in the sand. This creates a little bit more bullishness. Now, when I go to my scoring, guys, I have to be a little bit more pessimistic just because it's below the 20-day moving average, but only slightly, and we still have tomorrow to see if this can't just poke its head above that resistance level or that 20-day moving average. Now, I still believe that we're going to be in a range throughout the rest of the summer, barring any sort of bad news or, I don't know, anything way outside on left field. We do have earnings that could maybe shake this up a little bit, but I do believe that the inflationary trauma or fear of these markets experienced, and we saw that here, guys. We saw this back here when the markets got an unexpected CPI number a lot hotter than they wanted. We got another one of those 2 days ago and today, or yesterday and today, and much different reaction, isn't it? So that's why I think the markets are pretty resilient here in trying to price some of this stuff in. Now, the Qs is actually showing a little bit more strength, a lot of strength. Let's take a look at those same 2 candles yesterday and today, but a little bit different. Here we have the 2 closes actually increasing. And yes, folks, there's nothing to really write home about. Qs did close at 0.03%, but it was higher than previous. Now we take into consideration those same exact support levels here And you could almost justify that we have increasing lows, don't we? I know I'm drawing this a little bit more emphasized on the slant, but this pivot point could be a little lower than this most recent one, which shows we have ourselves a symmetrical triangle pattern. So that could be a little bit stronger than the SPY and the diamond. Take it for what you will. Going to the heat map, you can see that absolutely reflects it. The majority of the strength was in the tech, the semiconductors, all the Q stuff, right, for that matter. But there were some pretty good moves along outside of those lines as well. Eli Lilly, which is one of the picks that I had for the bull side, didn't really, I mean, it moved a lot more than 1.37% off of its low. You'll see the candle here in a second, but it's still a pretty good contender to a bullish trade. Nothing really triggered, though. So, but I wanted to take a look at it and explain the charts anyways. So where does that leave me? Below the 20, below the 50, 20-50 slope, still bearish, but I'm going to give it less bearish. Now, why am I giving it less bearish? Pretty easy, because we are holding support so far of a higher low. And what I mean by that is you see the low that we set mid-June. We set another low end of June, beginning of July, and we are now retesting that. Now, this could be erased itself tomorrow with a big red candle, and we're back to the drawing board. However, it could hold in or even close slightly higher, and we still have something to really take a look at serious going into next week. Now, I don't think I'm going to get too much movement when it comes to tomorrow. It is an options expiration, and Fridays don't tend to be one of those make or break days for the markets. Now that I said that, I might jinx it. So I'm going to keep this at a +1 because that support is still holding, and I'm very impressed with how these markets really shook off two bad inflationary numbers back to back. Now the markets gapped down both days and just came running back to regain the majority of everything. So I've got the potential trades. A lot of these are the same ones that we had last week and the ones we had a couple of days ago. Merck, Eli Lilly, Chewy, Campbell's still holding in there. I've got these trades you're going to take a look at, and you'll see how no matter what the candle did yesterday and today, it didn't really gain or lose anything. That's all. Roku is one that we talked about yesterday as a potential sideways. It's on its way down, but it is showing a little bit more resilience, so I still like it as a sideways trade. And then the bears are still the bears. Newmont is one that I would say because it's breaking down quite a bit. I think all precious metals are in light of the fact that there is a absolute flight to the dollar right now. Lots of money being put into there, and it's really causing some headways when it comes to precious metals, along with other currencies, right? The euro specifically. CRM was one that Corey talked about. I think that was on Monday or yesterday. No, Tuesday. I still like it. I still think it's a feasible trade. We'll take a look at it. It's a descending triangle pattern. So what are we doing here? Take a look at Merck. Didn't really go anywhere. We got sideways day yesterday. Didn't really react or have any sort of fear when it came to that number. And it's just kind of in this channel, right? It's just up in this channel. But today, gapped down, moved higher. No confirmation of the breakout. Now, folks, if you remember what we're talking about this, I want to see this break out of this 90, what do you want to call that? 95 and a half, 92, 94, yeah, about 95-ish area. And it didn't do that, but it sure as heck hasn't dropped below that channel. So this is definitely on my wait and watch list. And we'll see what happens come tomorrow or even next week. Same buddy of his, this is Eli Lilly. And you could see it's up 1.37%, but take into consideration where this thing gapped down, it touches 20-day moving average and went all the way back up to add another 1.37%. So it showed a lot of strength. When this showed weakness, lots of buying came into it, and it came into it pretty aggressive. It's in the same situation as Merck. I think I've said it before, and I'm going to say it again. Don't buy both of them. Buy one or the other. I don't want you to be bullish in the exact same company, basically, the way they move. So just choose one and play with it. But it didn't exceed any highs. It didn't show that it was breaking out of resistance. So we'll just be patient and keep it on our watch list and see what happens in the next day or so. This is Campbell's. This one came from Sunday's trading room, and it's doing pretty good. It's floating higher. But take a look at today's push and pull. Let's just make this a theme for today's class, folks. I'm going to zoom in on the last two candles. Let's take into consideration the opens or the closes. This is yesterday's close. This is today's close. And you could say, yes, it is definitely down. However, I'm going to make another box on top of it. It's still technically above its channel. Now, you could argue that this did trigger yesterday. You could see the green candle above that first box line, so it did trigger. So if you're in this, I'd still be comfortable in this because it's still showing some strength. So if it can stay at this level or continue higher, I think Campbell's is a great trade. Whether you triggered into it yesterday or you're still looking for it, I mean, it's probably pretty darn close. All right, so let's move on to Roku, our sideways trade here. This was on my bear watch for a while, and I think what really changed my mind with this was when we had set this high, but here's that higher low. Now we do have a lower high, so I'm going to need to see if this low here can hold. And if it can, well, we are back into this nice channel. I'm going to make this kind of big, all the way back out to, as I drop this box here, all the way back out to mid-March. All right, so that was support there. So I think it could play anywhere within this range and be a feasible trade to the sideways side. Okay, now I've got a couple of bears to look at. EPD is one, and what's tough about this, it's still bearish, but it's like, take a look at the range in the last couple of candles. Take a look at the volume today. I'm going to do it again, folks. Here it is. There's our last two candles. Sorry, guys, I put a third in there. But as you can see, the closes are decreasing. This one's got a little bit more range to it. I'd like to see this break, because once again, this is a bear. I'd like to see it break this shadow here. And I would be very comfortable targeting it down to this area or even further. So let's take a look at CRM. I did like this. Corey brought this up, like I say, a couple of days ago. It's got the same smaller candles, but they are going in the correct direction to the downside. It has yet to break its floor. Let's draw the straight line right at about, what do you guys want to call this, 160? So as soon as I see that break the 160 mark, I'm totally fine playing it as a breakdown, maybe targeted around the 155 area, diagonal spread, vertical spread, probably a diagonal, or maybe even a targeted butterfly. These get expensive when you're over 150 bucks, stuff like that. Sometimes it's easy to just leverage it off. All right, CRM. And then the last one is Newmont. This isn't great for let's jump into the trade now. I just kind of wanted to use it as an example to show you guys how much volume actually came in and how much this moved down. I have to double check to make sure it wasn't its earnings. There I said maybe it is. I don't think it was. But just the way that gold fell and some of the precious metals fell, this would follow suit. So something that if you were in bearish, you're super happy right now. Nothing that I really like about it as far as a new trade. I just figured I would show it to you. You're welcome, right? Okay, so support is holding after two strong tests this week. Both gaps down, both with very missed numbers on the CPI and the PPI. Both were expected to be higher, right? But not as high as they came out. It was quickly absorbed throughout the, I shouldn't say quickly, but throughout the day, it climbed all the way back out to retrace the majority of the day's losses. And the markets have been pretty strong. So options expiration for July is tomorrow. I don't know if that's going to affect much on the markets. They usually are pretty light when it comes to volume. They'll gap up and just trade sideways, or they'll gap down and trade sideways. I wouldn't be surprised if we get one more gap down and a race back up to neutral. That might be as expected. And then once again, guys, you've seen the headlines. They're popping up all over. Euro USD reaching parity. I saw it at one point. It was actually under $1. Can you imagine that? The first thing that popped into my mind, I want to go to Europe. I got to take a trip to Europe. I was having a discussion with one of our traders, and he said, yeah, but the flight's going to cost you like $2,000 to get there. So it cuts both ways. But that is signs of economic worry as that flight to the U.S. dollar continues. We're seeing a depletion of energy, less demand for that. Things are getting tighter. Interest rates are going up. So a flight to safety would be that U.S. dollar. Kind of interesting, right? And that is actually overseas as well. So Fed remains diligent on rate hikes. Immediately came out and said, doesn't matter if the inflation numbers are a little slow, we're going to stay ahead of it. So a 1 point basis or 100 basis points, 1% rate hike is still on the table, is now back on the table. But I don't think the markets give a crap. I really don't. We'll see. I could be wrong. We'll see if things change tomorrow with a lot of volume, so on and so forth. We are in earnings season. We got a slew here. We've got a bunch of banks. These are all tomorrow. United Health Group, Wells Fargo, BlackRock, Citigroup, We've got what is that? Progressive Insurance, U.S. Bank Corp, PNC Financial Services, and the Bank of New York. All coming out tomorrow. So keep an eye on those. I'm not sure if they're pre or post. Probably most of them are going to be pre, but we'll see if that has any sort of impact on the markets as well. All right, folks. Thanks for joining me, and we'll talk to you next time. Bye, everyone.